Hello everyone and welcome to Day Trader S&P 500. It's the weekend, the end of the month, Saturday, September 20th to be exact. This is Dale Woodson, editor of Woodson Wave Report. Wanted to let you guys know we're running that 25% off special on all of our subscription services for the first month. Okay, and we can show you right here. You go on to the register page. This page comes up. Choose any one of these subscriptions here. Put in 25 in the discount code box, hit apply, and there's your 25% off. Okay, that applies to all our subscription services. I want to start with something different here. I wanted to show you guys the video on demand because we have Bitcoin, Tesla, XBI, and SMH that I update at the end of every month. Just did today. I think I'd play you this, but I think the sound of a recording isn't going to come out, but we can I can just give you guys, let's just look at Bitcoin here and go a little forward, I'm afraid the sound won't be loud enough. But what I can do here is I can just show you guys what we're doing here as far as a couple of these. Like here's our Tesla. We update once a month. You can see we got 5 waves up from the March 2020 low into the November 2021 high. And here's a point I want to make because this keeps coming up with people. See this correction here, ABC? That is the 786 correction. You'll see the same in Bitcoin. And people say, how can Tesla or whatever be in a bull market when the index underlying or the underlying stock in an index is in a bull market, but the index is in a bear market? Simple. Tesla went down 78% from its all-time high. Okay, did NASDAQ go down 78%? Did the Qs, did any index go? No. So they need to bounce up from that. Okay, it's very common for these things to diverge, especially in big bear markets. Okay. So Tesla already had its 78%. Who knows? Maybe the NASDAQ and the Qs will get theirs. They just started. Okay. But anyway, this is the Tesla analysis. This is the daily chart. And like some of you may know, I know my customers know, I learned Elliott Wave on my basement wall in 1996 and 97. And when I first started charting, I saw nothing. I saw sideways. I didn't see 5 waves up. I didn't see 5 waves down. Turns out it was a 4th wave triangle. So by mistake or by luck, the first Elliott Wave pattern I learned was a triangle. So now it's virtually impossible to sneak a triangle by me because that's the first Elliott Wave pattern I learned. This is obviously a 4. A lot of times, if you can identify triangles, you can start with the 4 and find the 5, or find the 1, 2, and 3, and then you'll have a price projection for wave 5. So that's another way to trade and or to analyze the market. Where's the 4? They're long and sideways by nature, and there's 4 different triangle patterns. You know, you got ascending and descending and contracting and expanding triangles. So 4s can be long and complicated. Okay, but anyway, getting back to the Tesla analysis, you can see here we've got an A up, an A down, a B up, and a C down. And this thing went all the way to 101 in January, and C equaled A right here, and this was the 786. This was a great low to get long on. Okay, you can see right there we've got a 1 up, a 2 down. Let me get this into a little better view for everyone here. Okay, here we go. We've got a 1 up and a 2 down, ABC for 2, and then we've got a 3 up, and I had that target, but I moved it when I did the video update today to get a 5 target. So there's 1, there's 2, might be hard to see, they're small. There's 3, there's 4, which is right next to 1. I think it just eclipsed it barely by a couple ticks, but again, if it's a leading diagonal triangle and this is a first wave, that's allowed. We'll see how this plays out. That's why this is a downside trigger, and this wave 3 high of 299.29 is an upside trigger. So if this goes above that wave 3 high, then we target the wave 5 targets right there. 5 equals 1 at 336.56, and there's higher Fibonacci targets above. The 1.272 is 368, the 1.414 is 385, and the 1.618 is 409. So the bulls need to see this wave 4 low hold and this wave 3 high broken to the upside. A lot of our subscribers to our newsletters are loving this trigger and targets. We're putting triggers and targets on everything. Okay, if the wave 3 high is broken to the upside, we'll get a wave 5. It may not be a straight line, but we'll get a wave 5. Okay, so that's it on Tesla. Maybe I'll go ahead and do Bitcoin while we're at it. Okay, I just updated that. I think it was this morning. May have to get a bigger view on Bitcoin, so bear with me while I bring this into play. Okay, I don't know how those numbers got off on there, but they do that sometimes. It's not 1 trillion. Let's save that for later. Well, without the numbers, okay, somehow that got changed. But we had 5 waves up in Bitcoin. You can see a 786 retrace right here. It's kind of in the same boat as Tesla. It's trying to build a bullish pattern from that 786 retrace down. Okay, let's get into, if we can, the charts. Okay, and we'll go ahead and get into the ES. All right, and let's do. Well, I might be able to show you guys that better with the. Here we go. All right, on September 28th, which I believe was Thursday. Get you guys caught up. By the way, I'll be out of the office for about a week, beginning on the 4th. And I think that 25% discount goes through the 3rd. Okay, but this is wave 3 down extending. Originally, we liked this 3 with a circle here, but this is still developing, this 3rd wave. Okay, it's not going to make a 1-to-1 relationship. Okay, but it's a 3rd of 3rd wave at 2 or 3 degrees of trend. It's going to do at least a 1.618. And you can make an argument for further down on this 1. Excuse me, because we got a 1, 2, it's really small here, 3, 4, 5, but you can count this as 7 and get 9 waves down. Impulse waves are 5 waves, 9 waves, 13 waves, 17 waves, etc. to infinity. Okay, so this still could be going down in wave 1. But if that is the low, 42.77, then there's our upside wave 2 targets. This can go all the way up to the 45.97.50 without being wrong. It can't retrace 100% of the first wave. There's a first wave down in parentheses. This is a second wave up. Okay, so we're looking for a second wave up followed by a 3rd wave down, and this is the trigger here, 42.77. A move below here means this correction is over, or it hasn't really begun yet because this wave is extending. And here's our targets. Obviously the 43.10 has already been achieved. We got 42.32, 41.91, and 41.32 is the 1.618. And our time target here is October 18th. You saw this one, 1.0 from the B wave high was 818, hit right on it. The next is the 1.618. You can see it down here in the blue. Wave 2 hit right on it. The next move down was 926, and this wave down, we'll call it 1 for now, missed by a day. Now we've got to move up. There's nothing to say that it won't. 1018 might mark that wave up. We'll have to see. Okay. Anyway, and here we got, this is what we're looking for a move up followed by a move down, basically. See all the verbiage here, that time zone hit within 1 day. Okay. There's the wave 2 up, retracement targets. Excuse me. There's the trigger. There's the targets. That makes it real easy for subscribers. Okay. Looking for a move up in the black arrow, move down the red arrow. Okay. Fibonacci time zone, there's the 1018 to the 3.618 multiple. That was the earlier trigger to 43.66 that allowed the market to hit these downside targets. There's another one down there, okay? And those are the second wave highs at 3 different degrees of trend that need to be broken to the upside to break the wave count, okay? We're in sell rally mode as usual in these declines, okay? So I think that's it there. Yeah, there's that second wave high. It's not, well, there's a little bitty 2 there, 45.66. There's the other second wave at the next degree of trend. There's a second or B wave at the higher degree of trend. Okay, that was the September 28th report. let me get to the, I think I have the 29th and an Acrobat. Yeah, there we go. Okay, 29th, that was yesterday. All right, there's that announcement again. There's the same chart. I don't know if there's anything new in here. Here's that, oh yeah, we detailed the move up from that wave low. There was at 43.99. Excuse me. All right, we've got, we had trigger and targets again in red. 1 up, 1 down, 2 up, 3 down, direct hit within 4.5 points, 4 up, direct hit within 1 point or less than a point there, and then 5 down, another direct hit within 2 points. And then we've got an A up and a B down. You can see wave C here equals A at 44.05. So we're really looking at this move up, which is a 2. I don't have the 1 labeled there, but it's there, that 1 in parentheses. Now we're looking at that 2. We're looking at those targets up there. Okay, 43.99 through 44.75. And this is the beginning of it. We've got 5 waves up, 1 up, 2 down, 3 up, 4 down, 5 for A. Here's a B wave correction, which went almost exactly to the 618. So we should see 5 more waves up for C to complete the larger degree wave 2 right there in red. Okay, that's what we're looking at there. Let's see what else we got here to show you guys. I think this is just more of the verbiage here. Wave A up was complete, 43.71. B down at 43.11. Okay, there's those wave C targets right there. Okay, and that one is near the target, the larger degree wave 2. Okay, there's the trigger at 42.77. There's the targets, the first one of which has already been achieved. Okay, looking for a wave move up in wave 2 in the black arrow, lower in the red arrow, and there, that's things we already had. The second degree make or breaks. So without further ado, let's get into the monthly report that we put out again early this morning. I like working early in the morning. Anyway, here's our S&P 500 cash. That's what goes out to the annual subscribers. Monthly report. This is our October monthly report. You can see here from the all-time high, wave A was a Fibonacci 9 or Fibonacci 8 plus 1 months. Wave B went up for the same exact amount of time to within 1 trading day. A down was 195 trading days. Wave B up was 196. So there is A down. There is B up. That was complicated, okay, but it's over. It appears over. We've got to watch this decline, but it sure looks like it. There's our C targets, okay? C equals A at 32.82 in the S&P cash. Now keep in mind, that might seem like a huge decline, but in a bull market, an A down, a B up, 5 down, 3 up, 5 down for C is a normal correction in a bull market. So a move down to 32.82, while it might seem like the end of the world, it would be a normal correction in a bull market. Okay, we would need to see something much lower, like a 1.618 or a 2.618 or a 3 or a 4.618. That's when the bulls got to start worrying. All right, they're going to start screaming anyway if it gets down to the 3200s. Okay, I don't know many people thinking that'll happen, but again, we've been saying that for a very long time, since that all-time high, a 535 correction. Okay. And some people ask, how did you notice that? Well, the first move down was a 5. Okay, so these are all microcosms of each other. Okay, so that told us right there we're going to get a 535 because we got a 5, then we got a 3, then we got 5. Okay, so what else do we have for here? Okay, here's from that B wave high. All right, 1 down again on the 818, 2 up, 3 down within a day. There we're looking for a black arrow up to these targets, followed by a move down to these targets. Okay, that move down within 1 day of our Fibonacci time zone. Okay, it was within 5 trading days of our Fibonacci time spiral. The next dates in the time zone, as you can see up here, is 1018, and the next turn date in our Fibonacci time spiral, something I've been doing for over 25 years, is 1024. Okay, I think we can show that right here. There we go. That's where that 920 was in the Fibonacci time spiral. All right, it missed by a slippage of 5 trading days. I think it was close to 8 calendar days, 1 to either side of 8. So we're looking at 1024 there. Okay, here is the 10-minute bar detailing that move up from the wave 1 low. There is the 5 waves. You can see it much clearer on a 10-minute chart. 1 up, 2 down, 3 up, 4 down, 5. There's the B wave correction there. And you can see C is just starting. C equals A at 43.68. We should see at least that. But keep in mind, in these bear markets that I've seen before, I mean going back to 87, but more recently 2000 to 2002 and 2007 to 2009, some of these upward retracements were just minuscule. Like they didn't even reach the 382. So you got to be careful of that too. Okay, there's those targets there. All right, for wave 2 upward, and I put that in highlight. The 618 retracement is right next to, within a point of the 1.618 for C equals A. It's not on this chart here. This chart only goes up to where C equals A, but I did list those other targets there for C. See if I can get that. Yeah, that's in there pretty good. Okay, there we go. How about one more click? Yeah, okay, so there's the Fibonacci targets for wave 2 with the parentheses, and here's the Fibonacci targets for wave C, which when it's complete, C will be the top of wave 2 with a parentheses in it. Okay, so let's I think this is better than to see the charts. Okay, there's our trigger again, 42.38, and that brings these targets into play. I don't know if I have that here, the 42.38 low. If not, I'll grab the chart. There is the 42.38 low. Okay, do we have that trigger? Yeah, 42.38 trigger. Okay, a move below this low means that this correction either didn't start and this wave is extending, or it is complete and we're getting wave 3 with a parentheses around it, which should be a strong wave. It would be wave 3 of 3 of at least 2 or 3 degrees of trend, if not 4. So that's where you see gaps and volume and all kinds of stuff like that. People running around with their hair on fire. Okay, let's just go through this here. Okay, there's a trigger and target. So we get to the NASDAQ. Okay, the NASDAQ, see it topped in November of 21, where the Dow and S&P topped in January of 22. They all don't top at the same time. They sometimes bottom at the same time, but they all don't have the same percentage of decline either. Usually, not usually, almost all the time, the NASDAQ leads on the way up and leads on the way down. So you can see the NASDAQ has an A down, we've got a B up, okay, and C is just starting, 1, 2, and we're looking at 3. You can see the wave 3 targets from that July 19th high, which you might notice is different than the S&P as far as date goes, okay. Here's the wave 3 targets. If you can't see them, 12.864, 12.515, 12.332, 12.070. Okay, and on the bigger picture, here's the A down, there's the B up in parentheses, here's the wave C targets. It might look scary, but again, a normal 5, 3, 5 correction. I want to show you guys the alternate count, okay, because this low here is the Fibonacci retracement of a move up from a bigger trend, but we'll worry about that another day. But we can count this as 1 up, 2 down, 3 up, and this is an A, B, C so far of 4. Where in every count, bullish or bearish, first thing, and in trading, first question you ask yourself, 1, where is it wrong? Okay, that's where you lose money. That's where you got to know in advance. Okay, so where is this wrong? This 4 should not go below that 1. So if this goes below 12.269, that eliminates the bullish count. Okay, so it's in blue and it's a alternate count. Okay, so that's where we are. All right, there's all the information there. It's the same as above. Okay, confirmation of the bearish count arrives with the move below that 12.269 low, which is right up there. Okay, 4 shouldn't go below 1. And then that eliminate that, and the bullish count is marked there. Okay, that's all the same things. The make or break. B wave has traced out 1 and 2, 1 down and 2 up. There's those 3 targets there, which should be the same as these targets here. Okay, that's the wave 3 targets. That's in the NASDAQ, Here we have the Dow. Again, that topped on 1.5 of 22. We've got a 1 down and a 2 up. And again, the Dow is doing a 1, 2, 3. All right, just like the other indexes, you can see the wave 3 targets there. 33,420, 32,972. I got that wrong. It's 32,972, and then 32,737 should be the 1414. Okay, and then 32,401 is the 1618. The larger degree of trend, 1 in parentheses down, 2 in parentheses up. Here's the wave 3 targets, the first of which is down here at 27,386. You can see I'd be just below the wave 1 low. That's where 3 equals 1. It goes all the way to 22,261 for a 1.618. Of course, there's 2.618 and 3.618 and all of that. Okay, there's where the correct numbers are right there. Okay, and there's 1 and 2 up, and there's wave 3 down there. The bond market, I might want to get into this with the chart, okay, because we had an alternate count in blue, and it kept hitting right on our Fibonacci targets. So we moved that blue alternate count to primary wave count status, or it moved itself, okay. This is just the most recent price action. We had a 3 up and 4 down. So we're looking for 5 waves up to complete the larger degree of trend 5th wave, okay. See, I even left that in blue, 1, 2, and then 3, 4, 5 for the larger wave 1 with a circle on it. Wave 2 was a perfect Fibonacci retracement at 4.06%. And then we have wave 3 gained equality with 1 at 4.688%. All right, these are targets for a correction here, okay? And we only listed the top 2 because the third one would take us below the wave 1 low, but we got a 4.451 and a 4.376. And if this is 1 and 2, that would be 3, not 2. Okay, the higher targets are up here. Here we got the trigger and the targets. A move above this wave 3 high brings these targets into play. Okay, we're going up to 5, probably even 7% when you look at the bigger degree of trend. But again, we've been saying for a couple years now, the trend is up because a 49-year bear market was a 39-year bear market ended in March of 2020, and rates have been climbing fast and furiously. Okay, there's that trigger, there's the targets. A move above that trigger brings these targets into play. Okay, and there's 4th wave retracement targets that is mislabeled up there. My apologies for that. Okay, and let's go see if we can look at that more closely in the US 10-year. If we have that here, may have it over here. I think I might, yeah, there we go there. Okay, I think the other chart's better. We'll just leave it at that. Okay, let's get back to, we'll leave this here. Let's go back to the monthly report. Getting a lot of stuff. Here's the gold. Okay, long-standing long position in gold. All right, we're going back to 2015. There's 1 up, 2 down, 3 up right here at 2075. All right, that was in 2020. We've got an ABC4 right here. Some more direct hits. All right, and then we've got 1 in parentheses of 5 up, and this is ABC down. Here was our targets for 2. You can see the market hit at 1846, and the 50% retracement is 1847. That would be a nice place for that to go. We should allow for it to go lower. It should not go below the 1614 low, which was a direct hit on our 1619 target within 4 points. Okay, so we should see higher. Okay, the trigger again would be the 2081 wave 1 high. There's the trigger, there's the target for 5. Again, we've got from 2015, 1 up in parentheses, 2 down in parentheses, 3 up in parentheses, 4 down in parentheses, and then we have a 1, 2, 3, 4, 5. I think if this plays out and that is only 1, that 5 will be even higher, but that's the minimum target. Okay, so we'll see how that plays out there. There's the verbiage of that. Okay, second wave scored a direct hit. There's the trigger, there's the target. We remain long in gold. I wanted to show you guys too, while we're here, and again emphasizing that that 25% discount, but we've also got what are we getting into here? Let's get into this here. we've also got, I want to show you guys here, the there's a lot of people using, well, we're not a trading service, but there's a lot of people doing really well for themselves with our make or breaks and our retracement targets and Fibonacci multiples. I mean, we've got 20 plus year subscribers here, okay, but we got you just look at the numbers, you know, 89,000 in a month. Manage my trades in 401k. Here's he works with fund managers. No one was expecting what happened, but he was, because he subscribed to the newsletter. Different things here. Yeah, your willingness to make the usual, but it could always go the other way language. Yeah, I like to either be right or wrong. Okay, but we have our make or breaks. We know where we're wrong. We always ask ourselves, where are we wrong before we do anything, okay? Direct hit on a NASDAQ there, almost psychic, all that stuff here. Get into the second column over here. Yeah, there's people doing very, very well, okay? Made a lot more, 63,000 with just 6,000, okay, right there. And another one, averaged 9,000, a 770% increase since subscribing to the newsletter, okay. 6K, one of my best days. So there's a lot of people doing, and this person here started with 25K, made it to 89, then 112, and then 131, okay. He likes them, obviously. So I wanted to point that out, okay. So let's go back to our home here. Oh, and I don't know if I showed you guys this. We have auto trades with Striker, okay. I'm not a futures brokerage, but they are. So if you would want to do this, they auto trade my signals, meaning I make a trade, I give it to them, they make it for your account, you would open an account with them. They're a futures brokerage, and they would make my trades for you in their account, okay. So if you're interested in that, we have that too. Okay, let's leave you guys with this picture here. This is pretty pertinent, and these circles don't want to stay, you know, they got magnets on them and they're not staying central. So let's leave you guys with the market close report. Okay, there, that's a little better. That's what we're looking at, okay. There's our trigger, there's our targets. Otherwise, we need to see a retracement to these. Okay, that's it for this weekend. Until next time, take care, everyone.